the rank of platinum Shaman 25 in my animal business. I'm super elated. I'm super excited and elated. You can add on whatever you want. My family and my wife are here. They're sharing me. I'm excited. I'm overjoyed. Whatever is personal to you out there, but make sure they're going to follow that pattern. Now, so the other one is reality. Let's look at this goal I've set. Can we match this goal with reality? People normally tell me, can we face reality? In the common language, we say face reality. Now, to face reality, there are three things you must consider. The first thing you consider is what can stop you. I'll share a story here with us because I believe I still have some time. In my days of going, when I was in university, I studied as a and university. I had to do some work, some many jobs, so I sustain my school fees. Now, one thing I did was I had to apply
na so here phone and do five phone am nke no the man use one can ke cooperative no the many and mmiri emebi nke no ka nwe na system but it's not the way we bring a print and soft copy.
How are you? I thought you were the man.
Many a short delay.
I thought you were the son.
Yes, fine. What's up today? Okay, how are you number? Okay, when I cook say.
Man, I'm not hanging a target.
Hey man, come.
Your man can combat.
Okay.
Any target now. So that's why I'm not about it.
Oh, give me not but can maybe a wedding, yeah. I can get a wedding. The man is my guy. Yeah, I'm going to church. You know, I'm not going to I can imagine because of him so far. And I'm going to have to tell them with it. I will go and because they know first. On the other side, China will still wash your windows. Baby flower. Let's meet our fourth nominee in our most likely to succeed contest. Bob, are you happy? Do you want some macaroni and cheese? Sure. This is Bob. Our word is no.
Bob,
and I know as the move because I was in chocolate before Nalu answer. All right.
one man that has been that man grabbing from that I was saying that all of the yes, 70.
I haven't been walking on a scene no that way. That guy just dealt with me. Is what you are there, women. But I want him mother again. get send me again. Just check them email. Okay. So I'll put you back. Okay. What are you doing? Okay. Not a big name. send it this man. Okay. Yeah, Jochi. Come on, I'm in the office. About the same policy. The man is not doing it. I haven't had my protagonist. Okay, I'm going. All right. How come people didn't bring that soup out since they allowed it? Now someone.
I was blowing it out. I'm fine.
So what I'm home. Have you been eating this soup before?
Yes.
When?
Afternoon.
Did you saw that stuff? Where are you bringing that in? Give me the other plate. Give me the other one. If I ask you to like this for me, you can use that plate.
The
You are putting it the thing on the cotton.
Hello. Today is one of my best days, so please cooperate, okay? We on shifters, we on here. Someone goes. Can you read the pages you have to study for today? Go on.
Silence. Silence. But soft, what light is younger and what breaks. And yet,
Nigeria is celebrating Democracy Day upon the day, commemorating the restoration of democracy in the country. May 29th was set aside by the federal government as Democracy Day after Olusegun Obasanjo took office as the newly elected president of Nigeria in 1999, and a multiple decades of military rule that began in 1966 and interrupted only by a brief period of democracy from 1979 to 1983. The process of the era of military administration started in 1998 with a promise from the then head of state, General Abdulsalami Abubakar, to transmit power to a democratically elected government. Accordingly, a new constitution was adopted on May 5th, 1999, marking the beginning of the Fourth Republic. The end of military rule also brought about a new era of regular elections, culminating in free democratic transition, and for the first time, a change of power from the ruling People's Democratic Party to the opposition. Leo, who comes from the right, runs up and sees Pablo, who passes by the front. He gives a blue ball to me, and I will go in on the goal. You guys understand? Well, I think what do I have to do? You are part of the defense, so your main function in the game is going to be go when I go. I promise, the bag is all your and I want the ball.
Wow. We are still 8. Good evening, all. I think we will not wait for others. We need to start. It's raining heavily here in Abuja. I'm scared it won't affect our internet strength. Good evening to you all that are here. Let me. We are 8 in the house, and we have about 85 people registered for the event. The 9 coming, they're signing up at hand. Reach 807, 807, 807. 807. Can we still give the next 3 minutes? Heavy rain and storm here in Abuja. Okay, please, this 807, let's give remaining 3 minutes. 810 will start immediately. Okay.
The daughter wants to leave the house. Why?
Your voice what do we have here? Mute all. Your voice is recorded and you will hear in the recorded version. Okay, 808. 808, 2 minutes to go.
Mr. Adam, good evening.
Yeah.
Good evening, sir.
I can see Alabi in the house. Okay, you're welcome. I can see Pastor Sheun, Innocent, Rami, Ade, Rinze, Mr. Greg. I don't know everybody, but I can see V. Okay, we are increasing in number. 1 minute to go. We enjoyed the music that was just playing. Forex is my life. Ooh.
Let's go. Let's go.
Okay. Let me share my screen. Okay. Okay. Good evening, Mr. Alban. I was going to suggest that 8 p.m. may be a bit too early for people that go out and need to get back in. Please, can we move it to 10 p.m. next time going forward? 10 p.m. would be better for me, but it also may be too late for others that are not in Nigeria, because we have people outside Nigeria joining us. The last time we were having events 10 p.m., remember that our team in South Africa were complaining that it was too late for them. So if we are talking about change of time, we can move from 8, but 10 will be too far in also. Understand with those that stays in Lagos, how long it takes them to get back home. So we would try to keep to time. We'll look at the time together. I think this one we are using now was suggested by someone. It was suggested by someone. Okay. Okay, now let's choose what we want to do for today. We would live analysis. Using the support and resistance. Number 2, trend analysis. Trend analysis, support resistance, trend analysis, candlesticks, support resistance, trend analysis, candlesticks. What we mean trend analysis, we have to take care of identifying trends, spotting trends, reversals or retracement. Candlesticks, we should be able to do a little, not a little, because one of the most important things to stay successful in this business is what we call risk management. Risk management. What do I call it? Could I call it money management? Risk and money management, or money management. Let me put it money management, because I'm going to divide it into 2. That would include risk exposure and managing the risk before entering the trade, and it will include managing the opened position to avoid green turning red. The most important thing is to stay green, and anything that could help us to avoid green turning red, we have to take into consideration. Anything that could help us stop green from becoming red, we must put into consideration. It's very important. Then trend, support resistance, trend analysis, candlesticks, money management. What else? Can someone drop any other thing you feel I should take today? You want to do it on live analysis. Okay, 9 p.m. fine. Who can drop? Can you chat me up? What else do we do? What do you think we should? What other topic? What the UK for? Because for me, the important thing is for you to keep your trading system very simple. If you can keep your trading system simple, the better for you. Then after that, you need to check for which strategy you want to use in trading. By that, I'm talking about difference. There are two different things: trading system and trading strategy. If you have a good trading system, one can have a good trading system, but another person can actually make use of your system and trade better than yourself using a different strategy, using the same thing you use, but seeing a different thing, looking for a different thing, and looking for another method entirely from yours to trade. Please, if you have another thing I should talk on, how about the Fibonacci strategy? Okay, thank you. The Fibonacci tool will be used when we are going for trend. So under trend analysis, we have the FIB tool and trend lines. Okay, you can keep your trading simple by having not too much things. Importance of time frame. Okay, thank you, sir. Okay, when it comes to trend, FIB, trend lines. Okay, time frame. Please, others are communicating. You can type in so that we can communicate. The essence of this program, I mentioned it yesterday. In case you are here for the first time today, I would love to also let you know that it's a kind of throwback. It's a kind of throwback to the society. We want to give the little we know. We want to let everybody know exactly what they need to know to remain profitable in this industry. Those that were with me yesterday heard me start with a long statement because of how we felt. But now, today we are happy that we have more participants from Nigeria in this business, from Africa in this business, and as such, we have to encourage you to be able to do it. So whatever you feel you have a question, please. Yes, importance of time frame is very important. How do you know which time frame to trade? Thank you, sir. That's a good question. We are going to handle that. I've written it here, time frame. Whatever you mention, I'm writing them down. You can equally write them down on your notes so that in case we forget any of them, you can actually help me to go back to it. Your questions would help me as we proceed to give you more. Now let's go straight to, we are going to use live analysis, live charts to do this analysis. How do I get this screenshot? Okay, let me have this in a screenshot so we can actually refer to it. While you are writing it down, I have gotten my copy now, better. Okay. Welcome once again. Let's see how we can start from, let's do live analysis. Which currency pair can we use now? We should look for pairs that has, okay, let me use pounds Canadian dollar. Pounds Canadian dollar. I think it has something to show us there. I would equally look at USD Canadian dollar. Let me start from USD Canadian dollar. Let me start from other charts. So is this teaching being recorded? There is no light here and all my devices can go off anytime. Yes, it is recorded on the cloud. After the meeting, they would send it to me also. I don't record on the system in case of I have to switch over from the system to another system. So I have to record it from the cloud. Okay, it is recorded. Now let's proceed to a live chat, an MT4. Share screen, which of the MT4 am I using? 1, 2, 3, 4. Sorry, I have too many chats opened here. Share screen. Okay. Okay, I've seen it. Okay. I think this is Market Watch. I don't need it for now. Don't need the Market Watch for now. This is an old analysis. We did this analysis. This is weekly. Let's check monthly. Let me delete this out. Let's do it afresh. Take note of the tools we are about to use for this analysis. Take note of those things we mentioned above. Those things we mentioned above. We want to do them together now. And delete everything. Delete everything out. You have to take notes. You can ask questions. I think the chat is free now. You go. Okay. What's the message on chats? 2 chats. Is this teaching being, no? I've responded to that. What times of time frame? Okay. There's no new chat. Okay, when we are this time frame now, let me answer that question like this. Depending on one's trading system or strategy, whatever trading system, whatever trading strategy, whatever thing you are using to trade, whatever is guiding you to trade. I mentioned it yesterday and I mentioned it at classes here. The first thing you should consider, and that thing that will make your trading system so powerful, is when that system can detect the trend. Please take note, the trend is our friend. The trend is our friend. The trend is our friend. Nothing else than the trend. So it is the trend that makes us profitable. It is the trend that gives us money. It is the trend that TREND is your friend. Is your friend. Is your friend. Please don't forget this. This is a popular slogan in this industry. What's going on here? What's going on my charts? The trend is your friend. That's number one thing. You need to take notes. Nothing else can pay us except the trend. Now, where is this one from? Okay. So whatever system you want to use, please ensure that it gives you the trend first. Now, in this scenario, the trend we have here is the bearish trend. Why do we call it a bearish trend? Because of the characteristics. Because of the characteristics. So what we have seen here is the bearish trend. And the bearish trend, we can detect it without any indicator. How did we get there? You check here, you see zoom in and zoom out. Zoom in and zoom out. The same plus sign, the same additional button and subtraction button on your keyboard can do the same thing. You can use your keyboard to add or subtract. The same thing is here. You can zoom in from here or you zoom out from here. When we are looking for the trend, please, the real trend is not from the candle. You don't even need the candle. The wave is okay to give you the trend. I hope you have taken note of that. Now, what makes it a trend without using any indicator? We have been able to zoom out and see the wave. And what we are seeing here in this wave is what we call higher high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, till we come to the last, which is the lowest low. So we now have the highest high and the lowest low. The characteristics of a bearish trend is when price keeps forming higher highs and when price is forming lower highs and lower low, that is a bearish trend. Lower highs and lower low, bearish trend. When price is forming lower highs and lower lows. That is when we are having a bearish trend. Price is forming lower highs and lower lows. So without any indicator, you can tell the trend of pounds Canadian dollar from what dates? From the September 1998, which it has the highest high, till May 2010, which it had the lowest low. And from that day, between May 2010 and when it started this new journey, March 2013, the price was consolidating. There was no trend here. There was no trend between 2010 and 2018, 3 years, no trend. Then after this consolidation, take note that consolidations mostly happen at where a trend is about to change or reverse or retrace. Retracement or reversal, reverse or retrace. This has taken 3 years to remain here consolidating. Now, after the consolidation, whereby we now saw price had support at this level, 1.53, 1.5378. I've drawn a support. I'm looking for a round number, which I taught yesterday. I believe in round whole numbers when it comes to support and resistance. So at this point, I'm looking for 1.5000. That is the closest whole number around here, 1.50. So when I have my resistance or support in this scenario at a round number, I am more comfortable. I've been able to detect the trend as being bearish from 1998 till 2010, and the trend now there was no trend between 2010 and 2018. For 3 years there was no trend, and we are able to spot a major support at a round number, a whole number, 1.5000. That is one. And we should be able to look for the new trend started forming here, which is forming the bullish trend. When price is forming higher highs and higher lows, higher high, higher low, higher high, higher low, until this change, lower high, lower low, lower high, lower low, lower high. So what we have here now at the monthly time frame, bearish trend is lower lows, lower highs, lower lows. Bullish trend is higher highs, higher lows. They can write that down. Now I'm done with monthly time frame. What am I saying? I'm talking about this doing multi-time frame analysis. That is the answer I could give to the question, which time frame should one trade? When you are done with your multi-time frame analysis, detecting the trend, because it is the bigger time frame that has the true answer for trend. Bigger time frames tells us the true trend. When you get the true trend from the bigger time frame, you can now proceed to look for support, resistance. We found support. Let's look for resistance. Let's look for resistance before we leave this place, before we leave the monthly time frame. So we look for resistance, and this is 2.09. So let me think of a round number around this level, 09, 2.09, 2.1000. Okay, I think that would be a good round number. A whole number around here should be 2.1000. Okay. You can see the power of whole numbers. 1.2.1000, 1.50, whereby it has given us a range of about 5,900, about 6,000 pips range between the resistance and the support. Resistance, for those that do not understand resistance, resistance is like the ceiling of that room which you are, whereby you try to jump out of the room, the ceiling will hit you down. You come back downstairs, the floor will hold you, you cannot pass. So these guys are like, they resist the price here, they resist the price here, providing support here, providing resistance here. Now, we have been able to detect a range of about 5,900 or 6,000 pips. And this range is what the price had been into from when? After the movement from 98 to 2010, price had decided to stay between 2010 May. It took it till 2015 August to make 6,000 pips, and that is for position traders. A position trader might have detected this and would not leave this trade to make 6,000 pips. And between 2016 January 2000, let's take the green line, December 2015 or January 2016, price had been able to come back inside the range making about 5,300 pips. And discovering this range, resistance and support, everything you have to do is for you to stay within this range. Everything you have to do is for you to stay within this range. Why? Check the history. This resistance in Forex, in history, must always repeat itself. History keeps repeating itself. Even if not only Forex, even fashion. Check out. History repeats itself every now and then. This resistance level was one time a resistance as at 2007 November. Resistance here, 27 November or December. Support here, 27 June. Support here, 26 September. Was support and resistance here, 2005. It was support here, 2001. It was support here, August 2000. It was support here, 1996. It was support here as old as this level. This level, the history this level has is enough to give you confidence that whoever saw it price tested here, tested it between 1996, tested it again 2000, could not break, tested it again 2001, could not break, came back and tested here July 2005, could not break, bounced up again, came back and broke it September 2005. When it broke it, it came back again, resisted here September 2006, bounced back and broke it again up 2006 September still, and came back, had a support here. When it was supported here 27 May, it bounced up again and had the momentum to break on the September 27. And when it broke it out, please take note, it retested it. It broke out, it retested it at this on December 27. After the retest, it now retested at September 28. Since then, it started obeying the range of 6,000 pips between resistance and support. Resistance, now back to support. From here, it was forming higher highs and higher lows. When it got to this resistance level that has a history from 1998, it now started forming lower lows and lower highs, and that is what is forming at hand. It could actually turn here, being former resistance, now future support. The being former resistance, resisting this smaller channel, it has acknowledged that point, and meaning that when it broke out here, it did not retest. It has come back finally to retest this level of resistance that made price to consolidate, that caused candles to cluster here, could not break. So we could actually identify this point. It broke out and did not retest. So finally, it has come back to retest. But the journey between 2015 December has given up to 5,000 pips. It has acknowledged this place, it has bounced back. It could actually acknowledge this level where we are and come back to complete its own 6,000 pips range. So now as a trader, we are done with this. We have been able to see this. What you do next is what? You go and look for smaller time frame and see if the trend is truly a bearish trend. Here in the weekly chart, we are able to see from 2007, we saw the BS, we saw the consolidation we just saw, we saw the consolidation, we saw the breakout, and we are now seeing the retest of this breakout of this level here. And currently, this other line, I don't know where it comes from. Currently, we have price sit on this level. What price is this? 1.62, 1.62, 1.62. I'm looking for a round number here. Please permit me to look for a round number. 6 See 6050. 6050 should be nice. 6050, 6050, 6960, 60. So about this, support and resistance is not a straight line, it's a zone. So you could make it a round number, you could make it a zone, you can make it look, you can label this zone a support and resistance zone, a key zone. You can label it. It may not be a straight line. It's not a straight line. It is a given zone identified to be our former support, now former resistance, now future support. That is how history repeats itself. After doing this is weekly. I'll still go back down. Here in the weekly, I'm able to see the current trend is lower lows, lower highs, not until this point that the bulls have scored a point again. So bulls have scored a point here by breaking our trend line. At this point, we are witnessing the bearish trend that acknowledges, and now we are witnessing price forming higher highs and higher lows. Okay, so now we go to daily. These are chart markups you do weekends. You do on your 3 hours. You don't do them while you are trading. You do chart markups weekends like Saturday, Sunday. You do chart markups. Please, you can chat me. Don't talk to avoid noise in the recording. Thank you. So you do chart markups weekends. You do chart markups at your free time when you are done with this analysis. That is what we mean by plan your trade so that you can trade the plan when it's time to trade. So now we are able to see that we have gotten a support level here. Price has now started forming higher highs and higher lows. So at this point, we have discovered that there's a cluster of candles here. Is a cluster of candles here, meaning that what should ever cause candles to cluster here, meaning that this is a resistance level. This is a resistance level. At daily chart, we've been able to see another level of resistance. And this level of resistance here, history shows that this level, as at 2015 January, was a support level, was a support level, was a support level, was a support and resistance level. Check the date, check the history. Check the history. 2014, 2014, on daily chart now, 214 supports is where we are now. Now present day resistance. Former support of 214 is now the current resistance of 2017 and May. And when price broke this level, it did not retest until it got here, and now price had come back here. Support and resistance. When it came back here, that was when we were able to look for candlesticks formation. Candlesticks formation. This is when we were looking for way to buy and way to sell. At this point, we've seen the trend, we've seen support and resistance. Now we are looking for way to enter the market and way to exit the market. So your trading system should tell you the trend. Your trading system should tell you, show you support and resistance. If you cannot look for it yourself, as we have just done it. What I've just done is not a calculated support and resistance. It is a psychological support, and resistance. I know we have formulas to add and subtract or divide open OHLC and have resistance and have support S1, S2. It's still a good system, but the best support and resistance is the psychological support and resistance. And try as much as possible to make whole numbers or round numbers your support and resistance. Like here, I can actually look for 1.7844. I can now look for either 1.7800 or 1.790, 7850. 7850 is clearer here. 50 or 00. I prefer that point. If I'm taking a round number, 0050 to be my resistance level. At this point, when you wake up and see your chart at this level, you now see that the trend from here was a bullish trend, bullish trend. This is what was happening. All of a sudden, we came to a point of resistance that we were able to see has history from 2014. Price had come back there. And what have we seen? We now see an inverted hammer. An inverted hammer. Inverted hammer, whereby I think the best way of identifying a hammer is when the body of the candle, when a full candle is divided into 3 and one part of it is the body, 2 part remains as a stick, as a wick, that is a hammer. And this, in this scenario, it is an inverted hammer. Number 2, when we add this hammer to this bullish candle, it now gives us a bearish shooting star. Please take note of the words. You can search for them at Google. You can just type bearish shooting star, at least it will give you the image. Combination of a bullish candle and an inverted hammer. Combination of a bullish candle and an inverted hammer being a bearish candle. The body of the 2 candles align. This is a bearish shooting star. This candle alone is a decision candle, the inverted hammer. One can actually trade it alone, but when combined with these 2, with this one, the previous candle, this gives us a bearish shooting star, where you now decide to place a sell order here. And remember, we started selling from the 5th of May, just exited this, we exited this trade on Friday because we have discovered it may actually return. Let me see why we exited it. We entered this trade, the buy trend. Let's use the Fibonacci tool now. But from the low, let's see it here, we had the high. This is on daily charts. The bullish movement had retraced up to 50%. So one should expect a retracement anywhere around here. Or, let me check the charts. Being recorded, there is no, is it the same message? Okay. Okay, not the same message. Are we on today? Are we on today? Wow. I don't understand the question, please. So the trade is, and this sell entry, let's discuss the entry now first. This sell entry was also given to us at the harmonic pattern scanner. Let's check if it will show the harmonic pattern scanner. Harmonic pattern scanner. Where is it? Harmonic pattern scanner. We had the trade there, and we also had the trade. We saw the bearish shooting star and we now saw we had the bearish shooting star, pounds Canadian dollar. Let's search for it. We should be able to see it. H1, no. I'll show you the H1 later. I'm looking for daily. Daily, sharp. Our scanner showed that, let's see. Yes, the pattern is still here. Thank you. Okay, see the pattern. While we were doing the analysis on the MT4, we saw this bearish shooting star. We saw this bearish shooting star while we were doing the analysis. Now, after the analysis, please let me pick this call. Hello, sir. Please, I'm in a Zoom meeting. Please, I'm in a Zoom meeting. I'll call you immediately I'm done. Zoom. Zoom is a classroom. Link. Okay, sir. I'll do that now. Thank you, sir. So, you saw it that while we were doing the analysis, we now referred to our harmonic pattern scanner and saw that, please let me drop an invite link to invite. How do I do that here? Sorry for the interruption. It's a personality we have to invite, okay? I couldn't avoid his call. Copy URL, okay? How do I drop it? Please permit me to allow him in. Where do we have it? Okay. Okay, I've done that. Thank you. The harmonic pattern scanner. So we now have the harmonic pattern scanner. Remember what we had at MT4, at our MT4. MT4. Which of the MT4? Okay, I've seen it. Sorry, I have too many things opening here. On the MT4, we have done our analysis, we have seen our support, we have seen our resistance. We started from the monthly to weekly. This is the activity of any trader, that during non-trading days, you would have to mark up your chart. History keeps repeating itself. So you'll be looking for history. You'll be looking for possible scenarios. You'll be looking for everything. You have to mess up your chart by plotting trend lines, plot trend lines, discover when it was broken, plot resistance support, identify trend, connect one low, one high to the previous high, to another high, project to the future, so you can notice when it breaks out. This is a breakout of this, meaning that the bulls are scoring a point. You can detect earlier when this is broken out. You can actually see the difference. You can actually see when it is now in the bullish side. You also you draw trend lines everywhere, connecting a low to the previous low. This is how to draw a bullish trend line and project into the future. This is what you do. You have to mess up the whole chart by trying to identify both diagonal supports, diagonal resistance, which we identify them through trend lines. Supports that is not horizontal. This one we saw was horizontal support. Now we are seeing diagonal support, 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 project into the future, and you can see that we are still expecting to take profits here, about 61.8, if we are looking at the bullish trend, and we also wait for price to tell us, let's break down, and when it breaks 61.8, we can actually proceed this way down. But for now, we trade what we see. We don't suggest what we don't see. We have to trade only what we see. We can see that the entire movement from here to here had retraced 50%. And why did I exit this trade? Because I saw this place. I saw here 1, 2, 3, 4, 5 candles, 5 days, daily, 5 days. If it was on a Monday, it means from Monday to Friday, there was no movement. Check the date. The date is 24th of April, 21st of April, 20, meaning that this was Monday, this was Friday, this was on a Thursday, this was on a Wednesday, and this was on a Tuesday, 18th of April, confirmed from calendar. Daily candles here. So when this thing was down here, I had to exit the trade. Why do I exit? I'm looking for a pullback to give me another entry to proceed here. There are a lot of pips there. There are a lot of pips there. From this point to whatever pullback it will give me, even if it comes back to 38.2, I'll still have almost 200 or 300 pips to get to 61.8. And we wait in case history repeat itself by this same thing happening here at 61.8% retracement, or at the history, this trend line we drew connecting point A to point B and projected into the future, waiting for history to repeat itself. If it happens here again, this is when we start buying again. So now, for price action traders, we saw this shooting star to sell, and we now rush to our harmonic pattern scanner because we have something to refer to. We have to rush, look for any other thing to confirm. Am I correct? Is this decision I'm taking correct? We now rushed here. Unfortunately enough, look at the scanner giving us a sell signal. The scanner gave us a stop loss. So at this point, the job is easier for you. All you need to do is click on MT4, type in your stop loss, type in your take profit 1 or entry price, type in your take profit 1, 2, or 3, any one you wish to use. And take note that this scanner gave this signal before the price came here, meaning that the signal was a sell limit. The scanner saw the resistance earlier than yourself. The scanner spotted the resistance earlier than yourself. The scanner used the principles of Elliott waves, calculated the wave, saw the resistance before you, and the scanner also combines Elliott wave, scanner combines Elliott wave, the scanner combines Fibonacci ratios, Elliott wave, support and resistance. This is what the scanner had seen. That was why the scanner gave this trade signal as a sell limit order. Perhaps that time the price was here. Perhaps that time the price was here, while the scanner saw a sell limit based on the resistance, 8050, yeah. And he now made 8000. He now brought his stop loss here, gave the sell here, and we now saw it in our analysis that that place is a resistance zone that has history from year 2014, and now the support of 2014 is now the current resistance of 2017. We have our shooting star, bearish shooting star. We have our inverted hammer at that level, and we came for confirmation at the harmonic pattern scanner and saw that the scanner said on the daily time frame, daily D1, that we should sell. That was when we took the trade on the 5th of November, the 5th of May, and it has sold. Let's check how many pips it has sold. Let's check how many pips it has sold. It has sold. It has sold from the entry price of the scanner being here, not even the harmonic scanner now. Not even the shooting star now, but let's also use the shooting star in case we use the shooting star to decide. It has sold 508 pips or 520 pips. And you did not take this trade. Why? Because you did not do the analysis. You did not do the chart analysis. You did not do the markup. You did not notice that this level of resistance, which we detected, 78500, is a strong resistance that has history, 7850, and the scanner saw it before us. The scanner projected it as a sell limit odd place, and this is actually where the scanner entered. The scanner entered about 123 pips earlier before the candlesticks formation. The scanner entered earlier before the candlestick formation gave us an entry here, and so far has moved up to 500 and more than 500 pips. And when I saw that we came back to where history was of support here, I had to exit the trade, waiting for it to retrace and give me another opportunity to sell. If you did not join the movement, at least if it gives us the ability to sell anywhere around here to the 61.8, see that we still have up to 300 pips to make from the trade that the scanner gave. Now, let me show you another thing. The scanner had also detected this place. The scanner has seen this place. How would you understand this scanner? Is you understand it because you have the knowledge of technical. You have the knowledge of Fibonacci. You have the knowledge of support and resistance. You have the knowledge of price action, the candlesticks. Let me show you that the scanner saw this too. Let's go back to the scanner. The scanner saw this arrangement earlier too. This is scanner. Let's scan for pounds Canadian dollar H1. Pounds Canadian dollar H1. Can you see it? But so that you will not think that the scanner is confusing you. No, the scanner is not confusing you. The scanner is able to see what you have not seen. How do I squeeze this? Squeeze this to smaller. B. Am I not able to squeeze? Uh-oh. How do I squeeze this? Engineer, how do I squeeze this to smaller candles? Use my, okay, use my manual sign. Sorry?
You know.
Wow, how do I do this? Pounds Canadian dollar H1. I want to reduce the candle sizes. Who can assist? Who knows how to get that? I know too many things. Sorry? Sorry? Please mute your microphone. Mute your microphone. GBP Canadian dollar H1. Let's see if it will correct itself. It's too big. Okay, thank you. It's fine now. Please, whoever is that should be able to mute yourself. Mute your microphone. I've done that here. Okay, thank you. The same scanner is not confusing you, but the scanner is telling you that there is going to be a retracement. So on H1, a new form chart came up, and when we did analysis on Friday, I saw that level. I rushed to the scanner. I saw this. I remember those that were with me on class on Friday were able to take a buy here. Okay, on Saturday, we saw this here and we saw it on USD Canadian dollar. And I told them when market opens on Sunday, you can start buying this, because we saw this at a former support history repeating itself. Look at it. The scanner noticed this earlier than ourselves, using the Elliott wave theory and using the support resistance Elliott wave, using the Fibonacci tools. So now the scanner had given us a buy order here, whereby it means that with the scanner we can actually buy and sell in a given trend. And our take profit 1 is here. The trade had moved from entry price. Entry price is 1.7246. Let me draw them on MT4. 7246 hourly, 1 hour time frame. Okay, 1.7246. Let me change the colors. It will not confuse us. 1.7246. Come on. We change it to entry price. Let's make it red. Parameters 1.7246. Oh, okay. The scanner gave us a buy order here. Gave us a stop loss here. Stop loss is 7147. 7147, 1.7147. Okay. 1.7147. Stop loss 1.7147. Please take note of this. 1.7147. Stop loss. Then take profit 1, 2, and 3. I'll take profit 2 for now. 1.7580. 1.7580. I can even take the 2 and 3. 1.7580. 7580. Okay, take profit 2. I've skipped take profit 1. Let me take out take profit 1. Take profit 1 is 1.7431. 1.7431. 1.7431. 7431. Okay. Gotten it. Take profit 3 is 1.7820. 7820. Thank you, ma. 7820. 7820. 0.7820. Okay. We have been able to spot out these levels. Now, I think we can come and share this other screen now. So the scanner has been able to give us, this. The red lines are the spots. Okay. This is the stop loss, 7147. This is the entry price. This is the take profit 1. This is the take profit 2. This is the take profit 3. And all these, the scanner is able to have them from the help of the Fibonacci tools, from the help of the Elliott wave theory. And you can see that where it has the take profit 3 is few pips away from our identified resistance, meaning that price can actually come back and give us a double top. In terms of chart pattern, it could actually go back and give us a double top. It is possible for history to repeat itself. So at this point, we were selling from the feet of May, feet of May, feet of May. This is 18 May, feet of May, selling from the feet of May. Let's put a vertical line here. Vertical line on the feet of May is when the scanner gave us a sell, and the scanner had discovered that this former support and resistance is going to play out again here. It has now said, instead of us staying idle, that you can actually make some money in the retracement. Can actually make some money in the retracement. Now let's place Fibonacci ratio here. Let's check. Okay, we placed it earlier. T1. We placed the movement from here to here. We put our Fibonacci tool here to check where the retracement will stop. And most scenarios about retracement is between 50% and 61.8%. We still have 78.2 or so percent below, or 74.8% below. After that one, take note in the sequence: retracement to 50%, retracement to 61%, or to 74% will always go back to the extension of 161%. Let me not go there so it will not be complicated. But take note of this. In Fibonacci, AB equals to CD. AB in Fibonacci, AB equals to CD. AB equals to CD. That was when I labeled these points. A is where we drew the fib, the beginning of this trend. A. Please take note of this. A. Our takeoff point is A. Where the consolidation happened on our way up, where this consolidation happened on our way up, we label it B. Okay. Those were the things I deleted from the charts. So this becomes point B. And wherever we shall have the retracement, which is mostly at 50%, 61.8%, or in some cases, some currency pairs goes to 74.8%. Within those three retracement levels, we have C. So our projected C in this scenario, we could use these diagonal supports, which is about 61.8, to have to predict having C here. So we can now say C, which is C. C. Our possible C, we cannot tell C, but we hope it should be within 50 and 61. It could go beyond that. But if we have C here, I want to prove this formula, AB equals to CD. If C is at 61.8 or at 50%, how do we get our target D? I pick up a trend line from here. I don't want to take you to Fibonacci extension, not to confuse you at this level, but we use Fibonacci extension to actually determine 161. 161. But now I'm looking at using a common strategy for anybody to understand. From point A to point B, I put a trend line. Okay. I double click on the trend line, it highlights. So AB is equals to CD. Let's assume that C will be at 61.8. So we can actually have our projected take profit at D, because if this bullish trend is true, price must form higher high, higher low, higher high, higher low, and what? Higher high.
Okay.
The only thing that can stop us having higher high is that this resistance level that has history from 2014 is a problem. When this resistance level that has history from 2014 becomes, hello? Yes, sir. Okay. So when this resistance that has history from 2014 allows us to break above it, we can have our projected D here. So this means that AB equals to CD. See, Fibonacci tool is very common to trade with. Just make it very simple. Keep their trading system simple. We call it the ABCD of Fibonacci. This is our projected D. So whatever, if the scanner told us to buy from here, it means that the scanner has seen 50% retracement, which actually we have achieved that. We could still come back to 61.8 after 38.2, or we can still proceed, but our projected D is here. But the scanner refused to give us take profit outside D, outside B, because of this green line we saw that has history of resistance. But you, as far as Fibonacci is concerned, AB equals CD. The same distance, the same number of pips, from this point A to point B, 1,300 pips approximately, is the same number of pips you should expect from C to D. So if you cannot take up to 1,300 pips, if you can take at least 1,000, if you can take at least 500 pips, you can take at least 600 pips, depending on your equity size, please, that is okay for a month. That is okay for a month. This trade alone is okay for a month. Let's assume if we use the scanner to trade only pounds Canadian dollar this month, we sold from the 5th of May, and the scanner took us up to 500 pips using 16 days, and now the scanner said we should go in for a buy. What if the buy that the scanner is giving us, it has given us 500 pips already, and is now telling us to buy from here? We had the buy, and it decides to buy to its take profit again, 600 pips. That is 1,100 pips. What if it goes to our projected D, 1,000 pips, or that would be 1,500 pips? Is that not enough for a month? So you can actually not until you trade 10 different currency pairs. 1 is okay, provided you can detect it and catch it up when it is about to begin. Any trading system that can give you a good beginning, that can give you a good exit point, please value that product. Out of the 7 products we have, this product is able to see faster, detect faster, because it is working through the principles of support, resistance, working through the principles of Fibonacci ratios. It uses Elliott's wave. Elliott wave traders knows that Elliott wave is so powerful a system for one to use. The scanner works on Elliott wave, works on Fibonacci, works on support and resistance. I believe that whoever was using the scanner might have had a buy. The scanner might have seen a buy somewhere here or here. Pounds Canadian dollar. Did I buy this trade? I think scanner will be buying it from the start. This scanner buys from the beginning. It might have bought from here, or it might have bought from here. So if you are following the scanner, at least you'll be able to catch up here. Why not follow it till whatever it tells you to do, you do? It told us to sell, daily we sold. It told us to buy 1 hour, which is a temporary retracement, or it is actually going for D, or it is still preparing to come back to give us what we were looking for. Fine. So that is how to see a trade, have an entry, have an exit. Now, risk management. Please check the list. Is that what we discussed to do? Risk management. Risk management. Support resistance, trend analysis using Fibonacci, trend lines, time frame, multi-time frame analysis. Can use that word, multi-time frame analysis. Candlesticks. The only candlestick we have seen there is the shooting star in that particular chart. We can go, if we go to smaller time frames, we can see other candlesticks formations. Take note of about 5 or 6. Let me name them out. About 6 candlesticks formations that I personally appreciate. And I was taught 5 candlesticks formations at Market Traders Institute, but me, I add 1 to it to make it 6. Candlesticks that we acknowledge in trading, in taking decisions, includes the morning star. The morning star. I don't need to share the screen here, or I don't need to type. You can just write the morning star. Number 2, the evening star. Morning star is a bullish signal. The evening star is a bearish signal. Number 1, morning star. Number 2, evening star. Number 3, if I'm too fast, please, you can pause me. Number 3, we have the dark cloud cover. Dark cloud cover is a bearish signal. Number 4, if I'm too fast, number 4, we have the piercing line. Piercing line is a bullish signal. Bullish signal. May 28. Piercing line is a bullish signal. Dark cloud cover is an opposite of the piercing line. I'm just listing them now because I may not be able to take us through them one by one today. I don't want today's session to be as long as yesterday. So bearish, dark cloud cover is a bearish signal, while the piercing line is a bullish signal. These are the same setup but the opposite. So now we have, how many candles have I mentioned? Is that 4 or 5? That is 4. Let me mention the fifth one. The fifth one is the tweezer tops and tweezer bottoms. Tweezer tops are bearish signal. Tweezer bottoms are bullish signals. They are signals, meaning that it signals that there is going to be a change of trend. Something is about happening around here. After the signal, it is you that would decide to buy or sell. Reason that would make you to ignore a signal. Signal is not buying for you, it's not selling for you. But the signal is this, that price is planning to make a U-turn at this level. You would now consider if that level price is about selling when you are seeing tweezer tops being a bearish candle, if that level is below a resistance. If the candlesticks is signaling you to buy where? Buy under a resistance? No, sir. I cannot take this signal. Why should I buy under a resistance level? Sell below, sell on top of a resistance being new support, former resistance becoming support now. And on top of a support, a candlestick formation is telling you to sell. No, I don't take that signal. The signal I value is a bearish signal below a resistance level, because we sell high and buy low to make profit. You sell, you buy dollar when it is 350, 380, and sell it when it is 500 per naira and make profit. You cannot go and buy 500 and come and sell 380 and make profit. So you have to buy low and sell high. So when the candlestick is giving a signal, not all the signals that you have to take. You have to finish up with your support and resistance and the trend. You can ignore every bullish setup on a bearish trend. You can ignore every bearish setup on a bullish trend. You can ignore them. That is discipline. Your business is only to sell in a bearish trend and to buy in a bullish trend. You would never go against the trend. The trend remains your friend, remember. So now, the scanner had given us 500 pips in pounds Canadian dollar between May 5th and Friday. And the scanner has already cooked another 600 pips if we take our profits at if we take our profit at where it's giving us take profit 3, it has cooked another 600 pips. So that is about 500 pips from here, then another 600 pips to the take profit 3. What if we now go to our projected D? What if we succeed to break up the resistance level and we have 1,000 pips in addition to 1,000 to 500 pips we had earlier? That is how powerful the scanner is. Now, thank you, Nkiru. I wanted to show you how to calculate risk. That was why I went to read what we wrote down. I have shown you candlesticks. I've named the candlesticks. How many have I named? 5 or 6? I've mentioned these tweezer tops being bullish signal, tweezer bottoms, tweezer tops being bearish signal, tweezer bottoms being bullish signal, piercing line being bullish signal, dark cloud cover being bearish signal, morning star being bullish signal, evening star being bearish signal. Shooting star is either bearish shooting star or bullish shooting star. I've not mentioned engulfing pattern. Engulfing candles are signals, either bullish engulfing or bearish engulfing. Now the next one I want you to take note. Just you can write down the names. You can look for them on Google. I may not be able to show today because of time. Now the next one I want you to look for is the inside bar. The inside bar. The inside bar would be called the bearish inside bar or the bullish inside bar. Please work with this selected set of candles. Don't complicate issues. Make the trading simple. Work with only few candles I've just named. Try to identify them, and these are the informations they give. Remember, I said they are just giving you signal. The signal is subject to you interpreting the signal. It is you that will decide to buy. It is you that will decide to sell. I've also mentioned that 500 pips in a month is okay for an income of a standard lot. That is $5,000. For a mini lot, that is $500. It's okay for an income for a month for an average person. So you are making 500 plus 600 the next movement, fine, that is still good. You don't need to trade every product in the market to remain profitable. You can trade only one product, follow it up, make sure you are so familiar with that chart. Now let's talk about risk management. Risk management. Yes, this is what kills a lot of people. It's very important.
Alban, this is Jason Brown. I just want to say this is one of the best Forex trainings I've ever seen. And for all of you guys on this training, I hope you understand how good of a training this is.
Boss, when did you come in? Good evening, sir.
I've been here for 20 minutes. I'm enjoying this training.
Thank you, sir. Thank you, sir.
You are incredible. Guys, if you're on here watching Alban train, I'm telling you, he is so good. Take in this information and take it to the bank.
Thank you, my boss. You're welcome, sir.
Christopher Terry here. Thank you, Alban. You are absolutely amazing. You're a superstar. Thank you so much for what you're doing.
Wow. The house is packed full.
Thank you, sir. Thank you, sir. Wow. The CEO of I Am himself. Thank you, Chief. How did the link come there? I don't know.
Welcome, Chris.
We're happy to have you with us. Sir.
What a pleasant ride.
This is
I'm so excited. I'm
the
so
CEO
inspired.
of I'm Live himself, attending our lessons.
Wow.
Yes, honor, sir. Thank you for coming around, sir. Also, let's proceed to risk management. This is
so good.
This is what gives a lot of people the ability to manage risk. And remember, I said we are going to divide it into two. I want to divide risk management into two. Let me call it money management. The money management, I want to split it into two. One is the risk. Before you take up a trade, you have decided the risk. People scare you away from Forex by telling you that Forex is so risky. But they did not tell you that Forex is the only investment on earth that one can actually calculate his or her risk. You calculate your risk before you do the trade. You calculate your risk before you get to the investment. The one before you take the investment, you already know that you are risking a given percentage decided by you. You decide the risk. How much am I risking in this investment? Out of my $100,000, out of my $1,000, how much percentage am I risking at a given trade? Should I risk up to 3%? Should I risk up to 5%? Should I risk up to 50%? Is that a good investment? No. Please take note, in the forex industry, unlike any other investment, the highest risk, highest by portfolio managers in regulated countries, portfolio managers are not allowed to risk beyond 5% of an equity. Meaning that where we have regulations, you can actually sue your portfolio manager where he exposes your investments to a risk beyond 5%, where we have regulations. Don't worry, we are getting there with with what IML is doing, mobilizing, mass mobilization of participants in the industry. Very soon, we are going to be so large, you could even own an association that will be so influential that in this country, myself, yourself, would sit down and bring out a regulatory framework. We will be able to put it right the way it should be. So that is the future of Forex in Nigeria, and we are the people that will do it. No other persons. Others are novice. We are the ones that are the participants. We are the key stakeholders. So now, you calculate your risk before you take the trade. Let's take a possible scenario. Let's take we wrote something down. We wrote the current trade, the current one we wrote down. Who took it down? Let me see. Did I write it down? We have it on this chart. Let's see. Let's see the chart. We had the scanner, the current signal from the scanner on the chart. Please, you can write this down. You can take this down. Stop loss is, if you did not write it down, please take it. This is from the scanner. We just decided to pick it from there. And it was in H1. It was on H1. Okay. The stop loss is 1.7147. We want to do risk money management now. And I say I call it money management because I still want to split it into two. Risk management before you take a trade, and number two would be position management while the trade was open, while the trade is still open. Please differentiate the two. Risk management, that's before you take the trade, and number two is managing the opened position. Take the stop loss. Stop loss is 1.7147. Entry price, according to the scanner, is 1.7246. Our business of calculating risk starts and stops at stop loss and entry price. It starts and ends at stop loss, between stop loss and entry price. What am I saying? What I'm saying is this: we do not care about the profit. All we care about is the risk. This is the same thing, the right scale of preference in any investment on it. Any educated investor is considering the risk first, which is the security of his investment. After he's done with the security of his investment, that is only when he or she can ask about the profit. That's why before an investment of any nature or anything is established, the first thing the person does is to check security, check environment, check everything. Security of investment is number one. So in Forex, it's the same thing. We have seen the scanner gave us this buy signal. We saw the sell signal. Let's talk about the current one now. The current one is that our entry price is 7246, 1.7246. Now our stop loss is 1.7147. The scanner will not do beyond that for you as far as the web scanner is concerned, but the MT4 version will give you, suggest to you the lot size you should use. But now, let's do the calculation. Between the entry price and the stop loss, how many pips? You can do the subtraction. Subtract 7147 from 7246, or the simplest way is this: entry price to stop loss is about, let's take 100 pips. Take 100 pips. Take 100.
All right.
Okay. Now
that's huge.
Yeah.
Mr. Van, please, which currency pair is this?
It's not huge, but that is 100 pips stop loss.
Wow.
Which currency pair is this?
GPB card.
Okay,
Pounds,
thank you.
dollar.
Okay.
Okay. So risk in pips is how many pips?
100.
100 pips.
100
okay,
pips.
now what equity should we use for this business, for this calculation? What equity size?
Let's use 500.
500, okay. What percentage of your equity are you about risking?
$50.
50%?
No, $50, right?
Let's talk in percentage.
Okay, that's about 5%. Let's use 5%.
5% is the maximum for a portfolio manager, a standard portfolio manager, certified, licensed. IML does not allow you to risk beyond 3% and 4%. Have you noticed that?
Yes.
You go to the Fusion, you go to the FX Signals Live, you are not allowed to go beyond 4% because the maximum is 5%. IML is trying to keep us between, the swap trade tells us to risk 1%. The other setups gives us only 3%. So you should not even talk about the maximum. You can stay average. Why not take 3% or 2%? Don't risk up to 5%. Sorry?
Let's use 3%.
Okay. 3% is fine. So 3% of $500 is how much? $3% of $500 is
that's about 3%. 1%.
about $15.
That's about
15.
$15. Yes.
Okay. Please take notes. Risk.
That's about $15.
Risk. Risking 3% of $500. This is very important part of this training. Risking 3% of $500, and we say it is equivalent to $15.
Yes,
that's
$15.
That's $15. Then the stop loss for the stop loss now, it tells how many pips?
100 pips.
Risk. Minus 100 pips. Now, the same account, you enter trade with a particular lot size. The next trade comes, you enter with another lot size. The next trade comes, you enter with another lot size. That is determined by what you are about to
Can you mute everybody? Can you mute everybody? Is echoing.
Okay? Things should be better now. Okay. What makes you enter the first trade with 0.01, enter a second trade with 0.03, enter another trade with 0.1? It depends on this calculation, because not all the trades has the same risk in pips. Some trades will come with 50 pips stop loss, some trades can come with 20 pips stop loss. Those trades will have different lot sizes from the trade that came with 100 pips or 150 pips stop loss. Stop loss determines your lot size. The distance, the number of pips between your entry price and the stop loss determines what lot size you want to use, because you have agreed with yourself that you will never risk more than 3% of your investment in a given trade. So that's why we are here now. So what we do here is, let me move this. Want it to be on screen. Then the formula, you can write it down. Risk in value, that's risk in dollars. Let's put it so, risk in dollars, so we could understand. Risk in dollars, risk in dollars, risk in dollars, which is 15 pips, Abi. Risk in dollars, divide, where is the sign? Yeah, divide by risk in pips. In pips. That's the formula. Divide risk in dollars, which you have said 3% of your equity, 500 is $15. You have to divide 15 by 100. Is that a question?
That's 0.15.
You divided already?
Yeah, 0.15.
Okay, I'm coming. Let me write it down here. That is $15. $15 divided by 100, which equals to 0.15.
Yes.
Okay. Okay. Now a standard lot is how much in value? One standard lot is how much in value?
It's 1.0.
One standard lot, which is 1.0 in cash, is how much per pip?
Per pip will be $10.
Thank you. Is this was 0.15, Fabi?
Yeah.
This was 0.15, 0.15. Okay. So now, one standard lot is $10 per pip. We have to divide this result by 10, which is 0.15 divided by 10. Please, the result, 0.15 divided by 10 equals to what? Have you done that? 0.15 divided by 10.
That would be 0.1. 0.01.
0.01. Do you have any decimal point after one?
No, that's 0.015.
15. That's what I mean. Convert 5 to 1. Remember how we convert decimal point. So you can take 0.02.
Yeah. Okay, 0.02.
0.015. Thus
0.2.
0.02. So for you that has a $500 account and you want to risk 3% of your equity, you are trading with 0.02. You that has a $1,000 account, you want to risk only 3%. This particular trade, you are trading with 0.04. You that have a $1,500 equity and wants to risk only 3% of your investment in this trade, you are trading with 0. You keep adding it. This for 500, keep adding it. You have less than 500, you take 0.01. Please take note. I mentioned this earlier when I came to Abuja during classes. I told my people that the poor men take highest risk than the rich men. Because someone trading 0.01 in $100 with this calculation has already taken the highest risk. Mean that $100 does not have room in risk management. It's not even considered as part of investment that could even be managed. So this is how we get it. I believe you should it is clear enough. Divide it by 10.5. The 10 we have it is the value of a pip in a standard lot. This is how simple we get the risk. So that in another position we shall open, we can actually trade with a bigger lot size based on the distance, the pips risk between entry price. Like now, this trade I did not enter, it is about how many pips from the entry? About 26 pips late. If you are entering here now, remember that your risk is more than 100 pips, 126 pips. So in this scenario, what some people do is to wait for a retracement or a retest, looking for other setup to decide to enter a buy instead of buying here to increase the risk, or they reduce their lot size and buy here not to miss the movement. Because when you miss this movement, sorry, you cannot join again on the way. When you miss it, you miss it. Today, there's no volume, public holiday. US Memorial Day. China, is it Dragon Boat Day? Something, there's a festival there. UK, no, everywhere public holiday. So today, nothing has happened here. Let's check today, Control Y, the whole of today have been flat, no trend. No trend. Control Y gave me today, from the opening of today and the end of today, no trend, because there is no volume. These are the days Mr. Christopher Terry tells us to stay out of trouble, because there's no trend, there's no volume, nothing. So whoever is coming in here is just coming in here to punish himself. This is a day we call trading day for traders who are allergic, who cannot stay without trading. There are some traders that cannot stay without trading. They cannot stay without trading. If they stay without trading, they are not comfortable. So this is their day. It's called a trading day. While other traders that would not trade today would only trade on a trading day. See, a trading day. Friday was a trending day. I remember in the classes here, I told my students that we don't have movement on Thursday and that we should expect movement on Friday. On Friday, most people, they were not trading, but we had a day that was trending. Friday, we had a daily trading range that gave us from opening at least up to 200 pips, at least 250 or 270 pips. But today, the trading range today is nothing to reckon with because of the holiday. That is why you don't need to trade every day. You only need to trade on trending days. But in case you cannot stay without trading, today is only 77 pips, ranging up and down. The range is not there. See trend, no trend, no trend. See trend. You trade on trending days and stay out of trouble on trading days. That is another topic for another day. Please, can I take your questions, both on chat? I think I've done everything we promised to do today. Trading range, risk management, support and resistance, candlesticks. Wow, we need to analyze at least 1 or 2 trades. Do we still have time? Can you take your questions? Please don't miss this movement. Please don't miss this. I kept this for you. Please don't miss this movement. I would have analyzed this, but I cannot do that again. Check the scanner, you have this set up. Check the scanner, you have this set up. Euro
What
GBP.
is that?
Euro
Okay.
GBP. Please don't miss it. I kept this for this session. I have overstayed on analysis. Please don't miss that trade. Where is it? Where is the scanner here? Scanner. Where's my scanner? The scanner. I want to show you on screen. Please don't miss Euro GBP. It has gone for, where's my scanner? Wow. Too many windows. Euro GBP. Please don't miss it. Let's see how many pips is putting there. Sorry?
What is the EP there? 1.7.
It's loading. Can you see it?
Yeah.
Please don't miss this trade. It has a potential. Let me see the take profit 3. 8383, 8383. This trade we should not miss. I need to take it because the Asian session would open and London will come in tomorrow morning. Don't forget we have Frankfurt and please take note. You can write it down. Don't miss this trade. You can reduce your risk. You can reduce your loss size when you calculate your current entry price and the stop loss using the formula we just discussed. It's not good to miss opportunity. Don't miss opportunities. We have opportunities. You can also check on your scanner for Australian dollar, New Zealand. Is it there? Is it there? Who saw AN there? And I know USD card is already going far. USD card is already moving. Let's see. USD card 1 hour. Almost the same scenario with how do I increase this now? How do we see this? The USD card is already in profits. How do I get you enlarged? No. I can only do this on phone. Can't I do it here? Wow. Check your scanner for USD card. I think it's moving already. It has the same. It has a similar setup with the. I know that people that were buying it, we are almost at big profit 2 or 3 now. Oh, check if it's too late. You don't go. You don't know how to enlarge this now for you to see. Zoom full screen mode now. How do I increase the size? Check your scanner for USD Canadian dollar. Check your scanner for USD Canadian dollar. Check your scanner for Euro GBP. And when next are we meeting? Is this meeting a daily meeting? What time? Is it a weekly meeting? Please, let's decide now. I want to end the session. I also want to prepare for some pips that will start flowing in from tomorrow. Entry price was 3427. Stop loss is 3422. Stop loss 1.3422. Entry price 3427. Take profit 1 3439. Take profit 2 3447. Take profit 3
34597.
597.
Yeah.
No, I don't like using those last digits because they are pipettes. We don't have business with pipettes. Pip is what we look for. Okay. I think we can end the session here for today.
Yeah. So when will be the next?
I was asking, what's your
Hello,
opinion?
Mr. I'm sorry, please. The USD card, what's the stop loss?
The stop loss is 1.3422.
Check the entry price. Are we still at a good entry price, or are we late?
No.
I'll check later.
Okay. It's almost the same setup with the USD Canadian dollar. It's a retracement. Oh, I forgot to mention how to manage open positions. When your positions is in profit, at least up to 20 pips, please move your stop loss to break even. Close partial profits by closing some pips, closing some lot size, and remaining some lot size. Please,
I don't understand.
Okay.
I will have to do this next time. Euro GBP, we have, let me see, it has gone, the entry price was 8700. We have gone below it. How many pips now? We have gone how many pips? What you need to know, like between your stop loss and entry price to know, okay, we are about 9 pips. And Euro GBP is up to $15 per pip, not 10. Not 10. So your division will be by 15. Let me not confuse you today. Let's end there. Let's meet by tomorrow, 8 p.m. At least for the week, the market will now open officially tomorrow. There will be volatilities. We will be able to see charts. So many charts that we have marked up, we'll be able to see them. This is a USD card. I think so. Okay,
Hello,
this is a USD card.
Hello,
Can you see my screen?
We are not seeing it.
My screen
We are
is
not seeing it. We are not seeing it.
Okay, let me see it. Can you see it now?
Yes.
Okay, the entire movement of price. I don't want to dwell on this analysis, but the entire movement of price from 18th of April, this is daily, to what date? 5th of May. the 5th of May, that the scanner gave us a sell signal here, and this candlestick formation being a bearish engulfing, a candle engulfing the previous candle gave us a sell, and we sold this. While we were selling this, take note, we were selling looking for what? 61.8%. Can you remember? I deleted it. I'm using this. After the formation, in a bullish trend, I now saw this engulfing pattern, which tells me that it's going to sell. I now place my Fibonacci tool from the low to the high. I was now looking for. I now sold to exit at 61.8%. Can you see? At 61.8%, price had just formed what we call piercing line. This candle was a bearish candle, and the next candle became a bullish candle that went above 60% of the previous candle. That is called piercing line. And these things happen at which point? 61.8%. In a bullish trend. In a bullish trend. History repeated itself. It moves here, repeated itself, diagonal support. We are also about it. So that is the reason I decided to buy, and I went to the scanner to confirm that 1 hour time frame. Check the scanner H1, USD card H1. You see the setup. Come to MT4, you see the piercing line. You see the 61.8% retracement. Meanwhile, the scanner combines support, resistance, Fibonacci, and the scanner also has the Elliott wave count. It has about 3 to 4 different things to decide from. Unfortunately enough, today, Monday, 29, the market has closed and has opened the new day. The new day is just opening now. The market has closed. It's a new candle for a new day, and it's closing from 61.8. So the business is about to begin. USD card. Thank you very much for today. Any other question? I want to end this. Are we meeting tomorrow 9 p.m.?
Tomorrow.
Yes.
Yeah, that's okay.
Yes.
Okay. Please, you can invite your friends. It's free. It's open. A 1 month program. I want to run this throughout the month. I may not do it daily after this week. I may not do it daily depending on my schedule, depending on my activities. I just want to throw back. Let's see the value of the products we are having. You know, harmonic pattern scanner is only one out of 7 products that we have that is guiding us. We have the harmonic pattern, we have the daily swing trade, the trade called by Mr. Christopher Terry himself. He does his own analysis based on harmonic, based on Fibonacci, based on trend, based on this Elliott waves. We have that one. We have daily swing trade. We have the scanner to confirm our trade. We have the live television sessions, live TV sessions. We have the live TV sessions where we can actually go in, and thank God that today a new channels have been added. New channels have been added. Very soon we shall have a channel for Africa and a channel for Nigeria with what is going on now. That is what we are looking for the next future. Thank you very much for having time with us today. We would update the link for tomorrow. You will have the notification for tomorrow. You can invite others to join us. Let's keep it rolling. Let's have the value for our money. Let our money start working for us. Let our money start working for us. Please remember that this week we are having a very big fundamental this week. And when we have fundamentals, the price may consolidate. Wow, who is doing that? When we have fundamentals, the price may consolidate. Mute or it won't be nice we end without seeing what is happening for the week. Every trader globally are waiting for this event. Today we're waiting for Mr. Draghi, who spoke by 2 p.m. because the market was closed, because there was no volume, because UK was not open, because New York was not open, there was no volatility. But those that were with me, we actually made some money from 15 minutes time frame. We made some pips there during the live educational session here in Abuja. But now the biggest news for the week, let's check all the red folders. Those ones does not count. Please, everybody is waiting for this on Friday. The non-farm employment change on Friday. The claims will come up on Wednesday. Claims will come up on Wednesday. Claims will come up on Wednesday. That will be employment change. You can check this on your forexfactory.com. Please go to www.forexfactory.com. Check this out. If you go, your time is not same with our time. So please ensure that you set your time to be the same with Nigerian time. If you go to forexfactory.com and the time show displayed here is not correct, this time is not same with our time. Please, you have to correct it. This is 8:29 p.m. Let me refresh it. Let me refresh it. It should be the same time with my computer time. Yeah, 10:06. If you go there, your time here is not same with the time in your system. Please click on the time. It will take you to settings. See, choose GMT, Western Europe time, London, Lisbon. There is the saver, the time zone. Save the settings and go back to calendar. Your time will be set automatically to the time we are using here in Nigeria. So you'll be able to see, today we had public holiday in China, UK, and US. Details is here. Open here, you see the details. Open here, you see the details. Open here, you see these folders has the details. The red shows high impact expected, non-economic value at all, medium impact expected, and medium low impact expected, the yellow, and the brown, medium impact expected. This is where you watch. And as an investor, your television channel is Bloomberg TV. That is where you have all these results. All these results will be transmitted live on Bloomberg TV. You have it there on your DSTV. You have it there on your Star Times. Get it. Change your channel from Z-Wall. Change your channel from African Magic. Move to the channel that investors globally are watching and change your lifestyle. Change your lifestyle. Please go to channels that makes money. Thank you very much for your day. Get ready for
Thank
tomorrow.
you very much.
Have a good night.
Now, thank you.
Let's ready for
Thank
the
you,
movement.
Mr. Alban. All
Thank
right.
you. Bye-bye.
All right. Good night.
Good night to you.